Hello and good afternoon. We are here with all the important topics right before the U.S. stock market rings the bell. Carvana Company outperformed Wall Street's expectations in the fourth quarter of 2023, reporting adjusted EBITDA of $60 million against analysts' predictions of $58.6 million, although its revenue of $2.42 billion was slightly below forecasts. The used car retailer's share price surged by 20% in after-hours trading, buoyed by strategic cost control and debt reduction efforts, despite a net debt of $5 billion and higher interest payments totaling $632 million. Notably, Carvana's gross profit per unit increased significantly to more than $5,500, up from $3,022 in 2022. However, the company is anticipated to experience cash burn, with expectations of going through $1.7 billion over the next year. Amidst ongoing macroeconomic uncertainties, Carvana remains optimistic, projecting a substantial rise in adjusted EBITDA for the first quarter of 2024, aiming for significantly above $100 million as it navigates through industry challenges and seasonal sales patterns. Nvidia has for the first time identified Huawei as a formidable competitor across several key technology areas, including the artificial intelligence AI chip sector, in its latest SEC filing. The company, based in Santa Clara, California, highlighted Huawei's competition in the provision of GPUs, CPUs, and networking chips tailored for AI applications. Huawei's Ascend series, particularly the 910B chip, stands as a direct challenge to Nvidia's A100 chip in the AI chip market, estimated to be worth $7 billion. Despite Nvidia's reluctance to comment, the mention of Huawei, alongside other competitors like Intel, AMD, Broadcom, and Qualcomm, underscores the intensifying competition in the AI space. Additionally, Huawei's role as a cloud service provider designing both hardware and software for enhanced AI computing further escalates its competitive stance. Following the acknowledgment of increased competition and amidst ongoing strong demand for AI, Nvidia's shares experienced a 14% surge after projecting revenue forecasts that exceeded expectations. General Motors' autonomous vehicle division, Cruz, is gearing up to restart testing its robotaxis on public roads with safety drivers in the upcoming weeks, eyeing Houston and Dallas as potential test cities, as reported by Bloomberg News. This move comes after Cruz halted its U.S. operations in October due to an incident in San Francisco where a pedestrian was injured by one of its vehicles. According to Cruz spokesperson Sarah Audio, the company aims to relaunch in one city with manually driven vehicles and supervised testing to rebuild trust among regulators and the public, without setting a specific timeline for deployment. The decision to resume testing follows recent calls from labor unions and lawmakers for more stringent regulation of autonomous vehicles, amid investigations by the U.S. Justice Department and the Securities and Exchange Commission into Cruz's October accident. With plans to test with up to 10 cars in each city and no passengers, Cruz is actively engaging with officials in select markets to share updates and rebuild trust. This is all we have for you today. We are MEXEM TV, and we will be here next week, same place, same time. Goodbye!